Does it make sense to buy this current Chainlink dip? That's the question of this video, right? We came down quite a bit. And in order to answer this question, we will look at several technical indicators and we will look at backtests, so at simulations of buying and selling the Link token. So for this video, we've got several charts, several interesting statistics that will tell us how is Chainlink usually behaving during times like this. And so let's stop with the fluff and directly jump into this. Now, whether or not it makes sense to hold Chainlink long term is another discussion, right? So this is now the hourly chart. When we look at this on the daily chart, one might argue that we are somewhat in a sideways trading range here. Maybe the potential risk is 18%, the potential reward in the very best case is more than 200%. But we always have to look at any cryptocurrency, any altcoin versus the major movers, right? Versus Bitcoin versus Ethereum. And once we do this, the chart of Chainlink doesn't look as pretty. So look at this, for example. This is Chainlink versus Ethereum. So in the early days, meaning up to the 10th of August 2020 roughly, everything was going pretty well for Chainlink. So Chainlink outperformed Ethereum by more than 1,000%, more than 10x. But since then, Link is continuously underperforming. So this is almost a 90% underperformance versus Ethereum. So this doesn't look as bad just on the US dollar chart, right? But we always have to look at things risk adjusted. And inherently, simply because Chainlink is smaller than Bitcoin, is smaller than Ethereum, you take on more risk, right? There's some kind of security in numbers. The larger something is, the less likely something is going to fail because there's community behind it, there's adoption behind it, there's potentially also less inflation, less selling from existing investors. That's probably one of the reasons why Chainlink is underperforming that much. And so when you take on more risk, you should potentially also expect more performance. You should see your altcoin outperforming Bitcoin. It should outperform Bitcoin and Ethereum, and that's unfortunately not the case. Now, in case we don't want to buy this long term, let's say we want to bet on a falling price, right? We could, for example, borrow denominated in Chainlink in a decentralized borrowing and lending platform such as Aave or Geist, or even on a centralized platform such as Binance or KuCoin. You can bet on falling prices of Chainlink. But sometimes you do have these spikes, even against Ethereum, a 100% increase. And you probably don't want to be betting on falling prices when Chainlink goes down by that much. So what can we do? How can we potentially time this, that we are prepared, that we are not in the market in case something like this happened? So one thing we can do is we can try to backtest technical indicators, right? We can backtest, for example, the simple moving average or the exponential moving average. And we can try to find out what kind of moving average tries to predict the price movements the best for Chainlink. And so when we are here on tradingview.com, this is where the chart is plotted, and we press /, we can enter moving average, right? We can basically add this to the chart. This is now barely visible because this is in a very thin blue line, but let's change the styling a little bit, make this visible for the video. So maybe draw this here in green. And what we can then do is we can adjust the length of a moving average, right? A moving average is nothing else but just the average price of whatever other prices happened before. So when we look, for example, at this point over here, right? This here is simply the average price of, in this case, the 9 days that happened before here in Chainlink. So what you get by doing this average is you get somewhat of a smoothened price line, right? The price line, the price itself, it's fluctuating quite a bit, but the moving average isn't fluctuating as much. And the reduction in this fluctuation becomes stronger and stronger the more data we average out, right? The more we look back into the past. If we look at, say, the last 9 days, we've got a bit of averaging. If we increase this duration though, so say we increase this to 25 days, we see much less of fluctuation, right? This moving average here is getting smoother and smoother, and it represents the prices or the price direction more and more on a longer time frame, right? It looks at more data in the past. So when we look at this short term, it fluctuates more. When we look at this long term, it fluctuates less. Now, there is a relatively straightforward trading strategy here. And that is, we could potentially be outside of the market when this moving average line is above the price. So here, look at this. For example, from May 2021 to July 2021, we went down in Chainlink quite a bit, right? We went down by 58% from this point over here to this point over here. So we could decide in theory to just be outside of the market during these times. And we could be in the market, so we could be betting on rising prices whenever the price is above, right? And so we would still take advantage of these kinds of movements. Now, there's two ways to approach this, right? One way is to simply be in cash when this happens, right? So we just maybe earn DeFi yield on whatever platform you like to generate passive income on, or alternatively, we could also bet on falling prices. Now, let's look at the simple scenario first. So let's say we go in cash. So in this case, we've got this slightly differently plotted in different colors. So in white, we've got the Chainlink price, and in green, we've got our portfolio line. In black, we've got the moving average. And so the idea is when the price goes below the moving average, that we are now here completely in cash. And you would only bet on rising prices when the white line is above the black line, right? So we would be following the price movements during these times. Basically just in order to prevent that we are in the market when a big crash happens. Now that's one way to deal with this. Another way to deal with this is to basically bet on falling prices. So this is now the same strategy, but we are turning this around. Whenever the price is below, we are betting on Chainlink falling. So we are maybe borrowing Chainlink and then hope that the price falls further, that we can then pay back that loan for a lower price. So when we do this, right, this is a different portfolio line. So note when the price here is below the moving average, we are not just flat in our portfolio line is increasing. So with this point over here, we started from being long in Chainlink, from betting on rising prices to actually betting on falling prices. Thus, the Chainlink price falls, but our portfolio line rises. Now, there's this fundamental question when following such a strategy, such a timing strategy, and that's what's the ideal duration for a moving average here? Because we could work with all kinds of moving averages, right? We could work with, say, the 15-day or let's say 14-day, right? 2 weeks. We could use something like this. We could increase the duration and maybe work with the 50-day. And there's some kind of a trade-off to be made here, right? When the moving average is too long, what it means is we are less reactive. We do less trades. So even though we are in a bull market, for example, over here, we would still wait for an increase of 38% roughly until we actually buy. And the same is true the other way around, right? When we are in a bear market, we would still wait for a drop of 28% here until we actually exit or until we actually change our mind and bet on falling prices. So that's the problem of having very long duration moving average. However, when you do this the other way around, so let's say we have a very short-term moving average, something like this, right? Let's say the 7-day, then we are very often fluctuating around this moving average. And that can be quite a problem as well. So in this backtest, I simply just looked at the price at the end of the day, right? Midnight UTC, that's when we are buying or selling. That's when we are betting on falling prices or on rising prices. So we are not looking at the movements here within the day, right? The intraday movements. We are just looking at the price 1 point at a time, once per day. And so when you follow this and we are very close to the moving average and we've got a very short-term moving average, right? As in we fluctuate a lot, then we would potentially buy over here on the 29th of October, just to then sell again 1 day later for a loss of 3.5%, just to then again buy here on the 1st of November, because that's when we go above the moving average. And then again, we would sell just a few days later again for a loss, and so on, right? So we've got a lot of failed signals. We've got a lot of noise around the moving average that causes us no massive losses, but losses quite often, right? They repeat quite often because these fluctuations, they can happen frequently if our duration is too short. So that's then in the end the trade-off we have to make. How quickly are we going to react when timing the Chainlink token? And that's why we want to simulate buying and selling these different durations. What actually actually historically would have worked the best? What kind of daily moving average would have worked the best? And then that's the first question. The second question is, does it actually make sense to use the simple moving average or the exponential moving average? So there's a slightly changed version of the moving average. So again, when we press / over here, we can add the moving average exponential, and it is slightly different. So let's maybe style this here in red, and let's add both the same duration. So maybe let's make this 30 days for both. We will see that the exponential moving average is closer to the price movements. So this is both a 30-day, and I find this pretty interesting, right? So the exponential moving average is closer to the price. It reacts quicker than the simple moving average, and that's because the exponential moving average has some kind of a recency bias. So it weighs the recent price data more than the data that happened further in the past. Thus, it's almost like a shorter duration simple moving average. So we want to check out, right? What's the best duration for a moving average? What's the best kind of moving average? Is it the exponential? Is it the simple? And so this is the result of that backtest. So this is a bit of a complicated chart here. It's a bit complex, but bear with me. This is interesting. So on the x-axis, we've got the duration of the moving average in days. And on the y-axis, we've got the annualized return based on that strategy using 0.1% as trading fee. So this is basically the expensive trading fee of Binance. You can get reductions of this if you have some kind of VIP status, if you trade quite a lot, but 0.1% is kind of the standard. And so what we see over here in black is buying and holding. This is the return we would have gotten just by buying and holding. And in green, again, we see the simple moving average returns in this case, right? So this is not the moving average versus the price. This is 52 results of trading according to that moving average. By the way, 1 here simply means we look at yesterday's price, was it above or below, and trade according to that. But all the other values over here are actually moving averages. And so this is the best duration we see here. For the simple moving average, the best duration is the 11-day. And for the exponential moving average, the best duration is the 17-day. They both outperform buying and holding slightly. This is then how that looks like in chart format. So in white, we see our Chainlink price, and again in green, we see the return of that trading strategy. So both betting on rising prices when the price is above and betting on falling prices and the price is below the moving average. So the 11-day simple moving average. This is the same thing in a logarithmic representation. So those two charts are the same. This here just shows this on a linear scale, right? 200K for each of those horizontal lines. This here is instead a 10x. So we can see we are either pretty much similarly performing to Chainlink or sometimes above. Now the outperformance is pretty marginal, right? On a linear scale, it looks a little bit better, but on a logarithmic scale, it doesn't look that great, especially given that the price itself, right, just buying and holding Chainlink would have for some periods of times actually outperformed that strategy. So what we want to do is we want to somewhat refine this. So in order to prevent these failed trades that I've described before, right, when we're very close to the price, maybe it makes sense to have some kind of a buffer here. So what we can do is we can draw a band. So something like this. So we've got a moving average still, but we only act once we cross a certain threshold, meaning we don't want to trade all the time when we are just hovering around the moving average. We only want to buy once we go above the higher band, and we only want to sell once we go below the lower band. So in order to filter out this random noise around here, in order to make sure that we don't overtrade this. And then if we do something like this, right, the question is, what's the ideal band here, right? How much buffer should we give? So let's say we would be buying over here. At what point in time should we sell? Should the buffer be, in this case here, 6.6%? Should it be maybe 10%, right? Should we have more of a buffer? Should we have less of a buffer? What's the ideal buffer here when you follow the strategy? And that's the next backtest over here. This is on the x-axis the buffer, right? So how many percent of buffer do we take using this 11-day simple moving average, right? The best moving average here. So what's the best buffer? On the y-axis, again, the annualized performance. And we can see for many buffers, we're actually not outperforming, just having no buffer at all. But there is a range. So this is 0 buffer, right? There is a range where we actually do outperform. And this is somewhere between 9% and maybe 10.5%. So let's go with 10% over here, right? A buffer of 10%. What would then be our portfolio line? How would that look like? So this is no buffer, again, for reference, right? The chart we just looked at before. And this is now with the buffer. So that's the difference. I think this is more encouraging. Now we can see the volatility, the drawdowns from top to bottom, they are slightly less for the buffered strategy. We also see the outperformance here is more significant. We also see that most of the time we actually do outperform buying and holding. And so this is then the same chart on a linear scale. Okay, so 10,000 US dollars at the beginning of this backtest would have turned into more than 1 million. Whereas if you just bought and held Chainlink, we would now be below 400K. Now let's also have a look at the exponential moving average. It does slightly underperform the simple moving average without a buffer, but we haven't yet looked at the buffer optimization for the EMA. So what about that kind of a performance? This is now the buffer, so the exponential moving average, the buffer on the x-axis versus the return. And this here peaks at around 400% per annum. Note this other buffer chart, it peaked at 300 something, right? 325. So actually using the exponential moving average, even though it doesn't outperform without a buffer, once we do add the buffer, it does outperform. The size of the buffer is slightly different. So here the best value is 6.6%. And so again, for reference, this is the 10% buffer on the simple moving average, the 11-day SMA. This is 6.6% buffer on the 17 exponential moving average. So see how this changes. I think it's still slightly better, right? Look at this. It's still slightly better. And it also tends to outperform more consistently. So when we do want to trade Chainlink, it does make sense to look at the 7-day exponential moving average with a 6.6% buffer. Now, how can we plot this? So you want to look for MAB, moving average bands within TradingView. And then you want to double click on this. You want to select the 17-day exponential moving average. So you enter 17 over here, and then you've got your 6.6. So this is the best, historically speaking, for Chainlink, how we can time buying and selling. So with this approach, we would be bullish since the 18th of March of this year. And we would go bearish on Chainlink once we go below $15.43 roughly, right? So this would be another drop in the Chainlink price of approximately 6.5%. So currently Chainlink in US dollars looks bullish. Now that being said, it's still not bullish versus other cryptocurrencies, right? Like versus Ethereum, I think the chart pattern here doesn't look that great. But if you were to bet on just the US dollar price, Chainlink doesn't look terribly bad. At least this is what the backtest says. This is what that kind of a strategy would have returned. So how do I approach this? I personally like to be bearish on Chainlink. I like to rather bet on this kind of a trend continuing. That being said, I'm not very strong on this position right now. I do have a bit of exposure to falling Chainlink prices, but I do think it does make sense to wait until the overall crypto momentum turns around again. Currently, all of crypto, in my opinion, looks rather bullish. Thus, I do think the US dollar prices might increase. And since there's some kind of inherent leverage in altcoins, right? When Bitcoin goes up maybe 5%, the altcoins, they might go up 10%, and Chainlink does have some leverage versus Bitcoin or Ethereum. Since that's the case, and when all of crypto goes up, then probably Chainlink can still perform well, at least in US dollars. And so that's why I think it does make sense if you want to bet on falling prices, at least that's how I approach it. If we do want to bet on this falling, to rather wait to get really heavy on this position until we see Chainlink at least below $15.40 or so. Because right now in US dollars at least. It does look bullish for Chainlink. It does look bullish for all of crypto. And so simply keep an eye on this. I will keep an eye on this and potentially get bearish on Chainlink again when this turns around. But short to medium term, I do think actually that most of crypto is likely going to appreciate. There's a lot of hints that point towards this. I actually publish daily market updates on Bitcoin, on Ethereum, on various altcoins, and on specific backtests made for the premium members. So if you're interested in more details around that, or if you're interested in downloading the Excel sheets where I did those backtests, or maybe on tutorials, video tutorials on how to build something like this, then feel free to check that out. thebitcoinstrategy.com is the link. The current fee per month is $49 US. If you decide to sign up yearly though, you do get 2 months for free. Now, besides all of this paid content, I'm also going to continue to publish videos here on YouTube. There's a new video almost every day, so don't forget to subscribe. And if you haven't yet, a like on this video would be appreciated as well. It will help the channel grow. Last but not least, if you want to look at a relative valuation analysis of Chainlink versus other cryptocurrencies, then don't miss this video over here. It's got quite a bit of value as well. You probably don't want to miss this. So see you in that video, and thanks for watching this one. Bye bye.